The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love it and giving the old wow. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. Let's make it a great night and a great week. And we hope Villanova wins. Oh, yeah. The point of living is to believe the best is yet to come. Market-wise, let's take a look at it out here. We have the Dow Industrials down 43, Nasdaq off 17, S&P's down 650, gold contract down $5.70, trading at $1,217 an ounce. Silver off 10 cents at $14.94 an ounce. Platinum down $14.50 at $942 an ounce. Copper off a penny at $2.14 a pound. Light sweet crude down $1 at $35.77 a barrel. Bonds. The 10-year note up 6 ticks, 130.15. 30-year bond up 12 ticks, 164.24. And King Dollar down 103 ticks, 94.51. The euro is up 5 at 113, and the yen is trading at 111.28. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? If we go over to the SPY, what you're going to see is this, folks. Last Friday, you opened lower, rejected lower price. You go higher. It got over the small swing with volume. Bottom line, you're still in an ABC structure on the way up. We're at 206.27. 211 is coming at us inside the SPY. Inside the NDX 100, the 3 Qs. What do you have inside the NDX 100? Same type of setup. It's an ABC structure on the way up. A confirmed ABC, meaning that it took out a B point, took it out with volume. Friday, no doubt the market showed its hands here. The European markets were down 1.5 to 2.5%. Our markets gapped lower, said see ya, didn't want to be ya. Goes topside, has the juice going topside, takes out a swing point with volume, all of the above. The Qs right now are at 109.90. 111 is the number on this, baby. The gap down from December 31st, folks, was 111.84. And I expect that we're going to go right after that number. What we have out here today is that you're pulling back, you're going sideways to lower, and you're doing it with dramatically lighter volume. That's building cause for the next move higher. We're going to take a look at the gold contract. What do we have with gold? Gold rejected lower price last Friday, had lighter volume, actually didn't even make it to the lowest swing point, which is 1207. Bottom line is that gold now will get up into the 1287 area, and we'll see whether it has enough juice to get up and over that area. The XAU, the HUI, there, and ABC structures are on the way up. Oil, what do we have with the oil market? Oil gave it up out here today. Oil is down $1. Right now you're trading at 35.78, and you have some juice behind this move, so it looks like 35.26 is game. We'll see how it comes into that level. The bonds. Now, this is going to get really wild here, and this is why. The 10-year note right now, it's been up for 7 days in a row. It's coming into the downdraft from March 1st. Now, on March 1st, folks, we went from 130.27 to 129.18. Monster volume on the way down. These are 1.5 million contracts. The note, the 10-year note's trying to make it up into that level. Each and every day, you're dying on the vine with volume, and in an incredible way, too, by the way. So what we have out here today is this. If we close where we're at, that'll be a failure on price and volume, and we'll see whether it kicks down and backs off. But bottom line, the 10-year, you got a failure going on right now if it closes right where we are. If we go over to the 30-year, 30-year right now, you've done 122,000 contracts. You're coming into 300,000 contracts. And the 30-year, I actually would have liked to see it get to 165.10 instead of, it made 165.06. So the 30-year actually hasn't tested that high point yet. And that's being the 165.10. Yeah, we made it to the 06. It made it right to that number on Friday. And that on Friday we did 253,000 contracts versus 305. But it didn't close underneath it, so that, in fact, wouldn't be a failure. King Dollar. What do we have with King Dollar? King Dollar, folks, is on an ABC structure on the way down. It broke its B point, broke with volume. King Dollar's having a hard time holding price at all. Right now, we're at 94.54. What I expect you're going to see there, this baby is going to make its way down into that 92.50 to 92.30 area. The real kicker is going to be when we're down into that area, will it break that area? Because if you break that area inside the dollar index, you're going to see about an 88 pretty quick. Let's go over to Alex in Newton, Mass. Hey, Alex, what's going on?
Hi, Tom. How was your trip to Boston?
It was fabulous. We had a great time. We had a family reunion, and I hadn't seen a lot of my cousins in a long time, so we had a...
And then, thanks to you, we have 4 inches of snow today.
I know. Well, you know, it was amazing. Folks, it's just like crazy. It's Saturday night. It snowed, too, and it's like we woke up, and it was gorgeous. I mean, you know, but I couldn't believe it snowed so much so quick. You know, it was pretty amazing, man.
Yeah, it was 71, and the next day it was 36.
Yeah, I know, man. Crazy, man. It's pretty amazing.
Can we talk about any indexes? I don't. It doesn't matter.
Sure.
SPY, QQQ. Let's go with SPY, for example.
Okay.
What is the definition of the last engulfing?
A last engulfing would be that's a candlestick charting pattern, and what happens with a last engulfing, folks, is that you start lower and you end higher at the end of a uptrend. And so on Friday, that would be considered a last engulfing.
That's exactly my question.
Right.
So to prove that the market has to close below the Friday's low.
That's
right?
correct, which would be today. Yes, that's correct.
No, that will not happen today.
Oh,
that's
no.
sure.
You know what? Oh, that's interesting. I'm not sure whether it has to close below the low or just close below the high. I'd have to look that up again, but yeah, it's...
Okay, so...
what the definition is here, folks, which I'm not clear on, is that if, in fact, it has to close below the low of the last engulfing, or I thought that it just had to close, you know, below the high of Friday. I mean, to me, though, yeah, you stay right there. This ABC still wants to finish itself off, but that isn't a last engulfing. That absolutely is. You stay right there, folks. Stay right there, Alex. We're going to be coming right back.
Thank you.
Dow Industrials right now down 51. Nasdaq's off 19. S&Ps are down 7. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 57. Nasdaq is off 20. S&Ps are down 750. We're talking with Alex, and we're talking the SPY. Okay, brother.
So, I don't understand what is the last engulfing and how important this signal for you.
Candlestick charting in general is not real important for me. You know, just in general.
Okay, so to you, the most important is price and volume, right?
Yes. And in this case, what we also have is that when you break swing points and have ABC structures on the way up or the way down, that is very important. And we had them in all the indices, and Friday, it really showed its hand. You know, I mean, Friday, you know, like, it's like, okay, the market went higher. You know, I suspected it wanted to go higher, but it was so hard for the market to go higher, and it did it. So that's just telling me that it wants to finish off this ABC structure. Do you know what I'm saying?
Yeah, no question about that, especially looking at IBB today.
Yeah, and that's right, and the IBB, and that's what's, you know, bringing the composite higher.
Yeah.
You know, the IBB, you know, it's only up 355, but guess what? You know, you have some juice behind the IBB. Now watch what's happening here. You have juice behind the IBB, and the volume is so light today, it's unbelievable. But the IBB is taking out a swing point, and it's going to have volume. So it's like, okay.
It will probably have around 4.
Yeah, well, it's 2.3. Well, you know, let's see, what time is it? Yeah, it's early. It's only 20 past 3, you know. So, you know, there's some good numbers there. And in fact, our man, Mr. Steve Rhodes, I'm going to have him on at 3:30. He's explaining inside the den that in the last 20-year period in the S&P, there were, I think he's saying there were 193 last engulfings, and only 3% of them were basically reversal signals.
Actually, there was a great article today in the journal, and 68% of last engulfings lead to higher prices, 12 to low prices, and the rest sideways.
Yeah. You know, like, yeah, the candles, price and volume is everything for me. That's That's the bottom line.
Thank you, Tom.
Okay, man. Have a great one. Have a safe one. And sometimes, folks, you know what's amazing is that I know I do the same thing over and over and over again, but guess what? That's what it is. It's between price and volume, Fibonacci's, expansion, contractions, and ABCs, you know, and where those swing points are. And that's kind of the name of the game. If we go take a look at the NQs right now, NQs are down 29 bucks. We're at 44.99. This is testing the lows again of the day. And the first low that was established out there in the NQs was 11 o'clock this morning. And that one there had 5,000 contracts. The second test was at 2 o'clock, 10 past 2. That had 4,000 contracts. And we're coming right in now. And this is going to be a big test. The reason being is that we're only 1 minute into this. I use 10-minute bars, folks, okay? So we're 1 minute into this, and thus far we get 1,000 contracts. So the real kicker is going to be, your correlation is 5,000 contracts, 44.95. And there's enough time at this particular point. If this test holds, what you'll see is that, bottom line, this thing will have a shot to run back topside into this 45.18 area. Now, the volume in the markets are dramatically lighter today. Thus far, we've done 532 million on the NYSE, and on the Nasdaq Composite, we've done 1.3 billion. So what you're going to have here is that you're going to have a pullback, a sideways move with lighter volume, and all that sets up cause building to try to get up into higher prices once again. So it's going to be wild watching this whole week shake out, because what you do have is that realistically today probably is the last day of window dressing. You might have a little bit more of it tomorrow. And this is when the IRA money comes in. It comes in Friday. It comes in today. It will get put to work today. It will get put to work tomorrow inside the marketplace. And that's why the bias would be that the operators, the fund managers, could push it higher at these time frames. Because what does happen on a fundamental basis is that fund managers do not get paid on cash. You get paid on putting that money to work. And so that's kind of what the basis is of how that bias would be put in the money, put in the market, and wants to go topside. We go take a look at some of the high volume stocks out here. Virgin Atlantic got bought out. Big buyout too, man. This is pretty wild, watching an actual airline get bought out. So we haven't seen something like that for a long period of time. That little baby is up $16, trading at 54, and you can see, you know, the amazing part about it is that, you know, sure enough, you know, last week they reported that, yeah, that it was looking to get basically, you know, that you had Alaskan Air. The news was there last week that Alaskan Air was looking to buy Virgin. What happened is that Virgin, you know, went from a price point of $30 up to $39 in 2 days. But who would ever think that realistically, when you look back at this, this is almost 100% move in 5, 6, 8 days. We went from, if you go back to the 22nd of March, that's trading at $30.53. Today it goes up to 55.42. You're at 54.96 right now. Some of the higher volume stocks in this market out here. Facebook is what's putting pressure on the NDX 100 too. It's pretty interesting. So Facebook has volume as it's moving lower. Facebook is down $3.80. You're doing 44 million shares. And let's see what she has there. She's just coming in for a test of the lows today, but I'm not sure whether there's a downgrade on Facebook or what there was. Inside the Dow Industrials, strength versus the weakness, this is what we have. The strength out here, Pfizer is up 66 cents, Merck is up 71, Apple is up $1, and Verizon is up 26 cents. We talk about Verizon. We do appreciate the patience with us out here, folks. We had Frontier bought all of Verizon's landlines, business lines, Fios lines in Florida, Texas, and I think There's one other state. Anyway, we had the changeover on Friday, and needless to say, they blew the changeover. The residential was cool, but it was the business changeover that they blew. But thank God we're back up and going. On the downside, you get Nike is down 170. GE is off 81 cents. Intel is down 70 cents. And Costco is down 32 cents. Inside the NDX 100, this is what you have. The strength versus the weakness. The strength out here is Vertex Pharmaceutical. That's up $4.15. Tesla is up $12.33. They sold, we'll go back to Tesla. I'll do it right now. I heard this number this morning. It was pretty amazing number. Yeah, they had 250,000 reservations for their Model 3 car coming out. That's a big number. No two ways about it. That is a good number. Alexa Pharmaceutical, that's up $4.79, and Intuitive Surgical is up $17.17. You stay right there, folks. We'll be coming right back. Dow Industrials right now down 72. Nasdaq's off 25. S&Ps are down 9. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solutions CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials down 74, Nasdaq off 26, S&Ps are off 9.5. And don't forget, folks, no matter where you are right now in the country, listening in your car, you can get us right on your cell phone. TFNN.com. Just hit Tiger TV. Monday, Wednesday, Friday, we do live programming from 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. Our man, Mr. Steve Rhodes, does an outstanding show every trading day, 1 to 2 Eastern Standard Time. Just go to TFNN.com, hit Tiger TV. Now, Steve also has a great newsletter. It's Mastering Probability. You can come over to our website right now and test drive it. The way you do that is this. You go to TFNN, you go to newsletters, go to trading newsletters. You can test drive it 1 month absolutely free. Steve Rhodes, what's going on?
Well, it sounds like an April Fool's joke that it was snowing up in Boston.
Oh man, it was wild, man. It really was. We woke up and what was so cool actually is that, you know, it snowed, I guess, from about 2:30 to about 6:30, but it snowed a lot, man. It blew my mind how much snow actually, you know, accumulated. But then it was gorgeous out. So.
Yeah, well, they have had those big snowstorms up there. I mean, remember when they were getting, feet and feet worth of snow up there?
Listen, we were at my daughter's house. We were staying there, and she still had, it was like you're in the middle of New Hampshire, folks, because the poles you still have up to do the driveways and make sure you don't wreck everything was still there. So, yeah, I know. Pretty intense.
That's great. That's great.
So,
hey,
go ahead.
You go ahead.
Well, what are we going to look at today?
Well, I think, a lot of your discussion with regard to the NASDAQ, the NQ, I mean, I think we're all looking for, not all, but many of us are looking for a potential top in the marketplace. And so the first chart that I've got on my screen is kind of interesting. This is the chart for Apple. Now, the red diagonal lines on my screen is the price channel. But
yes,
if I go ahead and I switch this over to a monthly basis, you'll be able to see, and I'll just explode it up here for folks, you'll be able to see the channel lines on the longer term basis a little bit more clearly. And, longer term, Alex was talking to you about lasting engulfing. And, whenever we see any of these candle sessions, we've got to always take a look at what's going on a daily basis, weekly basis, longer term to always put things in perspective as well. But back to Apple, if we take a look at what's going on right here, price today, interestingly enough, ran right into as far as resistance of that descending price channel. And with obviously Apple being, I don't recall, 11 to 13% of the NDX 100.
Yes.
And I heard you say Facebook was struggling today.
Right.
I think, Google is struggling. And so it'll be interesting to see whether or not Apple's got the energy to get above this resistance level. If it does, our eyes have to go focus right here.
That'd be pretty intense if it does, though. That's interesting, isn't it? Yeah.
Well, if it does, if it is able to take this out, my opinion is the NDX 100, the NASDAQ composite, can take these markets higher no matter what's going on.
Yeah.
And so, it just happens to be that it's at a critical juncture today.
Right.
And, there's no failure that I can see inside of Apple other than running right into resistance. And, even if I were to turn on our TAS market profiles, this doesn't show any kind of resistance as well. They would indicate that Apple ought to be able to make it up to about the 120 area. So it'll be really interesting to see,
at that, right,
how this falls out. Now, this here, we're taking a look at, in essence, diagonal resistance.
Yes.
If we step it up and go from this daily chart that we're looking at to a weekly chart for the NDX 100, here I'm taking a look at horizontal lines of support and resistance. Now, what we're looking at on my chart, so this is taking Bud Rolfe's work and showing the horizontal trading ranges. Now, the nuance here, Tom, is because I was able to automate this process, a monthly candle is going to close differently typically than a weekly candle will, than a daily candle session. So I'm able to take a look at all those co-located opens and closes to identify the largest areas to then give us that price differential to build each of those floors. So on my process, the weekly looks different than the monthly, looks different than the daily. At this stage here, it should populate. These are all the daily, even though I'm showing weekly candle sessions out here, these are all the daily horizontal levels of support and resistance. But I'm going to turn back on because it's really interesting to me. We just ended the month, right? We're right smack dab into, and the monthly resistance level inside the NDX 100 is 45.48. And, at the close, what was the close on Friday was 45.34.
Okay.
So really close. So the week, or the, price right now is really bumping its head up against a pretty significant resistance level, which if it can clear, is pretty bullish. If I turn all of these horizontal lines off, What we also know, it's right, the NDX right smack dab. It couldn't be any clearer than this. Right smack dab into that downdraft that began in the beginning of January.
Right.
So, it's really at some very interesting levels. And then what's really interesting, if we go from now the daily chart into the weekly and go into the equity futures contract inside the NQ, one of my favorite patterns, because it's called basically every major market top and bottom, and I'm referring to on a monthly basis, but I use it for all different time frames out here. And as price was moving lower last Friday, so each of us have different systems and tools to be able to identify what the market is doing. This is one of the tools that I use. And as market was moving lower last Friday, where it seemed like, okay, things were going to crack out here, the NQ was making my favorite pattern of moving lower, doing it with less relative weakness out there. And it was one heck of a bounce. It was from what the Dow was down, futures contract off about 100 or so to finishing up 100 plus.
Right.
Nice big move on Friday. And then the top that we've seen so far, this is intraday, right? Because we're just looking at a 30-minute chart out here. So as of 6 o'clock this morning, that's when we got our signals, between 6 and the 8 o'clock time frame, where these bearish reversal signals were showing up on my screen out here. And then price since then obviously has moved lower. Now, we don't have any kind of real bottoming pattern, so the overnight action is really going to be important to this chart. Now, the cool thing and the bullish side, at least the bullish side from what I'm looking at for another bounce, is the fact that this could be just simply setting up a Gartley buy pattern, just an A to B equals CD to the downside overnight, which says that maybe the NQ, when we wake up in the morning, it's around the 44.74 level.
Okay.
I have another tool that says as long as the NQ is able to hold 44.66, the market's not going down, it's going up. It's just a market coming back and testing a support level. So I guess I throw it to you. When I take a look at all this and knowing right now we're towards the lows of the sessions here, what do you see taking place in Asia? When you take a look at your charts,
let's take a look at it.
Because I think that becomes a pretty, Asian and obviously
Oh,
the
it does.
DAX.
There's no doubt. HSI. So we look at the Hang Seng. Hang Seng last night was down. Whoops, 1 second. Down 277.
Yeah, they might have been closed last night. I think they might have been closed, and I don't know if there was a holiday because I showed as
Yeah,
April
that would have
1st,
been
but-
closed. That's the first. So let me go to China 1 second. So if we go to China, we take a look at the Shanghai. So the Shanghai was a sideways move last night. Oh,
Well,
that was
I
a
think it's-
rejection of lower price, man. Oh, this is going to be sweet if
was
that
it?
were open. That's
Well,
the first two. Hold it.
Yeah.
Well,
it's gonna be
the way
fun.
that the both of them are set up, they both set up that look to me like they want higher price, man. So
Apparently buy patterns.
it's going to be wild, man. Listen, folks,
Right,
come
Tom.
over to our website at TFNN. You can test drive Steve's newsletter right now, Master in Probability. Go to newsletters, trading newsletters, test drive Master in Probability 1 month. Steve, have a great one, a safe one.
You too, Tom. Thanks.
Come right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 73. You get the Nasdaq off 27. S&Ps are down 9.5. Let's go over and take a look at JDST for one of the Tigers. So the JDST, folks, is the gold miners 3 times bear exchange ETF. This is the Market Vector Junior Gold Miners Index bear position. The low in this for the year is $5.09. The high is 73. And if we take a look at this, let's see what we have here. So you come down on big volume. We've been coming down on big volume for quite a while, but if we go to the closest one on the 29th of March, you went from $6.50 to $5.26. You did that with 5.7 million. And bottom line is that you're going up today with 3.3 million. And we pulled back on Friday with 4.6. So bottom line is that that's an equity that wants to go to lower price. If we go to the XAU, the HUI, just to get down and dirty with this pretty quickly, what you're going to see is this. And I know this isn't the juniors. I'll do the juniors for you too. But the XAU and the HUI, all these gold and silver stocks have tested the breakout areas, tested them with dramatically lighter volume, and rejected price. That's saying the XAU and the HUI want higher price. XAU right now is trading at 67.77. HUI, the Gold Bugs Index, right now Gold Bugs Index is at 174.10. That is the stronger index too, the Gold Bugs Index. That is hanging right at its highs. JDXU, I think. One second. JD. Access. No. Can you give me in the den? Give me the please the. Thank you. Thanks, Mike. GDXU. So this is the correlation. This is what the GDXJ. So this is what Paul was looking to do is owning the JDST. Now this would be the GDXJ is the positive 1-to-1 ETF structure. So we'll bisect and dissect this. So this is what you have. This little baby, same deal. It's rejecting lower price on a continual basis with higher volume. In fact, it's an ABC up. Your A point on this is $16.87. Your B point is $24. So you got what, $8? Your C point is 24. So you're talking 32. And we've hit 29.50 thus far. So it's an ABC structure up to 32. It blew away its B point. It did that on the 3rd of March. It followed through on the 4th of March. And bottom line is that the last time that we had strength, once again, inside this whole consolidation was the 29th. 29th to start pushing into its swing point with volume. So bottom line, if you buy the JDST, what you're doing is that you're basically going against the ABC structure. That is a confirmed ABC up. But that's what makes a market. That's the other side of it. But these equities want higher price, the gold and silver equities. Silver is still having a hard time with price. There's no two ways about that. What is going to get intriguing here with silver is that what silver didn't do on Friday, which is pretty amazing actually, is that silver also didn't bust its lower swing point, which is $14.61. It came down hard, however. It came down at $14.78. But when you can't make the swing point, guess what? That means there's a buyer there, and right now, today, it's going sideways with light volume. But that is still setting up. When you can't break a lower swing point, and you do have the price spread, and you have some juice on the way down, that's normally a positive that you want to go topside. Let's go take a look at the small caps out here, the IWM. What we have with the small cap is this. The IWM is trading at 110.14. This is backing down with dramatically lighter volume. It's pretty amazing, actually. We had gone topside with 46 million shares. We're going down with 17 million. This IWM, wants 113, and right now you're trading at 110.15. So this market continues to want higher price, which is pretty wild. But and what has happened is this. This is my take on the market right now. My take is that, we're coming up to the top. Wants to finish the ABC, structures the way up and all of that. But what you also have happening, which is pretty cool, is this. Because of the way that the market has come back so many times from being down, specifically coming back last Friday, is that as we get up to these highs, that is going to be a really cool deal because of the way that we have come back each and every time. The bears will be scared to sell into that market. That's kind of how it works. And another deal that is inside of this, which is pretty cool. One of the targets just said, is the oil move down on the way up? No, I don't think it is. But that is another indication that oil itself, and this is where the WAP sense of markets come, folks, is that, the market's down today. Oil's down. You're doing 500,000 contracts, which is good volume, by the way, okay? But this was coming into, some strength that it had on the 16th of February. If we take a look at the USO, you can match up the volumes pretty good without doing a continuous contract. You're down today on 34 million shares. Well, you're coming into 87 million shares. You're coming into 58 million shares. You can see what's happening here. As you're backing down, what's happening is that you're backing down with lighter volume. So that is telling me that the oil contract itself will turn, meaning turn around. That goes higher. More than likely, what that's going to do is bring the market up. And until these ABC structures finish off, this market wants to go higher. What you want to wrap your head around is this. We have an ABC structure, not just in one indice. You have the composite that did an ABC, you have the SPY that did an ABC, you have the IWM that did an ABC, and you have the Qs that did an ABC. What does that do, folks? That brings the probability much higher that it's going to finish off. And the way that it finishes off is going to be pretty cool to watch how this thing shakes out. The reason being is it doesn't make sense that you'll just get the one-to-one correlation also. That it's not that that wouldn't be too easy now, because what is happening, because this has been going back and forth so dramatically, and particularly, as I said last Friday, it was down hard. There'll be a few more surprises before this thing wants to make its turn. If we go take a look at the trend, the 5-day arms, bottom line, that thing is running almost just about, a yin and yang. Today we're at a 1.1. So what that's saying, there's just as much buying as there is selling. If we look at the tick index, it doesn't say a thing. Okay, both of those got to get blown out of the water. The tick's got to, do a plus, big time number, and the arms has to get into a very small number. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow right now is down 69. Nasdaq's off 26. S&P's are down 9.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow right now down 68, Nasdaq's down 25, S&P's are down 9. We go over and take a look at these futures for a second as we come into the close here. What you're going to see is that the E-minis have tested. Actually, the E-minis, the first low in the E-minis, 11 o'clock today, was at 2057. Your next low was at 2054. And then we hit 2054 once again and tested it. Now, what the E-minis have just done, and this is pretty cool watching how this shakes out, because coming into the close is always a trip. What the E-minis did is that you did have a buyer in here right at 20 minutes of. 20 minutes of, we just went from 54 to 56. Now, that isn't the big deal of the 2 points. What the big deal is, you're going to see this expansion of volume. We did 34,000 contracts. What that says to me is that operator will come back in again, because that was pushing on the higher end, meaning 2056, versus the lower end. Now we'll go over to the NQs and see if, in fact, you have the same setup inside the NQs, because normally, if you're going to just, expand, whether it's 2, 3, 4 points, you're gonna get it in both of the futures contracts. The NQ, what the NQ has done is this. The low that was established at 11 o'clock this morning, that was the low, 44.95. We came down and we tested that area at 10 past 2. We got to 44.97. We came down at the 20 past 3, and we got to 44.96. The NQs had 3,500 contracts, as that S&P had more. So inside the NQs, we didn't have that type of expansion that we had inside the S&Ps. That doesn't mean that it won't go. If we did see that, though, the probability would have been much higher that we would have finished off, at the 45.08 to 45.10 area. And when I say finished off, that means by 4:15, because these futures contracts close at 4:15, folks. The market closes at 4, but the contracts themselves are going to go to 4:15. We go into if we take a look at that correlation using the 3 Qs, what you're going to see is this. The 3 Qs, the first low that was established out here this morning at 11 o'clock had 262,000 shares traded. The second low had 400,000 shares traded, but it never made it to the low. That made it to a price point of 109.74 when the low was 109.68. When we just came down 10 minutes ago, we made it to 109.72. And, this baby is trying to get up into the $110 level once again. Right now we're at 109.81. It looks, if we go over this, let's go to the SPYs, so you can see, look at that correlation inside the SPY. And what we have with the SPY is this. The SPY right now is at 206.10. The SPY, this is pretty cool. Okay, so the SPY continues to have volume. Yeah, the SPY is going to go. So watch this. Last 10-minute bar, we did 2.3 million shares. This 10-minute bar, we're already at 2.6 million. That's saying you're pushing with volume, so your probability goes much higher that you're going to hit the 206.39 area, and we'll see whether it can get up and over that area in the next, well, this is in the next couple of minutes. But that is pushing into that area with some juice. That's the bottom line. Dow right now is down 65. You get the Nasdaq off 25. S&Ps are down 8.5. Some of the you stay right there, folks. We'll be coming back with some numbers for you. Yeah, it's amazing that numbers and earnings are already starting once again. Dow right now is down 67. Nasdaq's off 25. S&Ps are off 8. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Alex in Newton. Hey, Alex, what's going on, brother?
Hi, Tom. How are you doing?
I'm doing great, man. Yourself?
I'm doing pretty good.
Good, man.
Subscribe for your gold report. I've been following you for a while. The first time I subscribed for it. And what I love about your gold report is that you give us a direction. You give us an overview of the whole market, and you leave final decision to us because you give a lot of ideas. After that, you can choose whatever you want to follow, whatever you don't.
Yeah.
That is great.
Okay, brother.
Thank you.
Have a great one, man. Have a safe one.
Thanks.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We're here 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. And let's go Villanova. They're going to win tonight. Remember that there is part of life for which you are the explanation. Market-wise, let's take a look at it out here. We have the Dow Industrials down 55, NASDAQ off 22, S&P's down 6.5, all with light volume, folks. Pulling back, light volume, this market still wants higher price. Gold contract down $6.60, traded at $1,216 an ounce. Silver down 11 cents, $14.93. Platinum off $15 at $941 an ounce. Copper down 2 pennies at $2.14 a pound. Light sweet crude off $1.08, $35.70 a barrel. Bonds, we have the 10-year note up 8 ticks, 130.18. 30-year bond up 19.6, 164.31, both on light volume. King dollar down 43 ticks at 94.57. King dollar's on an ABC structure on the way down. I expect we're going to work our way down to this 92.50 to 92.30 area. Right now it's trading at 94.57. Euro flat at 113, and the yen trading at 111.32. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. This is what you have. You get a sideways move out here today. You get light volume. That's after last Friday. The market rejecting lower price. Goes topside. The SPY goes from 203 to 207. We did 114 million shares last Friday rather. Today you go sideways at 60 million. That's a market that wants higher price. We're at 206.25. I suspect we're going to get into this 211 area inside the SPY. Inside the NDX 100, if we use the 3 Qs, what you're going to see inside the 3 Qs is this. 3 Qs are down 42 cents right now. You've done 16 million shares. We go topside Friday with 26 million. You're at 109.94. The ABC structure up on this is 111. 111.84 will close the gap that was left over from the downdraft that was from December to January. Gold contract. What do we have with gold? Gold also wants higher price. What gold had done Friday, rejected lower price, had lighter volume, didn't break a swing. Bottom line right now, we're at 12.17. Today what we did, you did 85,000 contracts. That's a sideways move. Has light volume. Bottom line, gold contract has been building cause since it broke topside on the 11th of February. I expect we're going to make a run now up into that 1287.80 area. That's on the short term. On the longer term, gold wants to run to the 1394 to 1434 area. The XAU, HUI, both of them rejected lower price last week, had lighter volume, went topside once again on Friday. XAU's at 67.63. That wants to make a run for the top of the consolidation it's now in, which would be the 73.81 area. We go to the Gold Bugs Index. Gold Bugs Index is trading at 174.58. The top of this consolidation is up there at 189.13. I do expect we're going to see that run being made. More than likely, we're going to see it this week. Why? Because it's all about that King dollar. King dollar wants a dramatically lower price, folks. Let's go to the oil contract. So oil gave it up today. We had contract value of 514,000 contracts. We're down $1.13. You're trading out at $35.66. This baby probably more than likely is going to get down to 35.37. In fact, it can actually get into this can get into 33.93. So you had some juice on the way down today. If we do look at the USO, what you're going to see, that's the ETF structure inside it. That pulled back with 37 million shares. The difference is now, of course, you're at 908. You're still coming into 58 million. So in the futures contract, as well as the ETF structures, you're pulling back with lighter volume, but it does look like you can continue to get to slightly lighter price. The bonds, if we go to the 10-year note first, what you're going to see inside the notes is this. The notes today closed at 130.18, and all it's had to do is close over the 130.16. Has really light volume, but what that's saying is that more than likely it's going to test the high of its downdraft. The downdraft we're talking about was March 1st. March 1st, the notes went from 130.27 to 129.18. That's a point and a half, folks, for a 10-year, which is huge. We're doing dramatically lighter volume, but we did close over that Friday high. That's saying, guess what? You can get to the very top of that downdraft. We go up and we take a look at the 30-year. What you have with the 30-year, same type of setup. Right now, the 30-year is at 165. The top of that setup is 165.10. We made it to 165.06 today. I do expect we're going to see it get up into that area. Now, let's go over to good old King Dollar, because what we have with King Dollar is this. King Dollar is in a confirmed ABC structure on the way down. We are at 94.56. We broke a B point. You broke it with volume. The price projection of this ABC structure on the way down is $92.30. What we also have here, when you take a look at the King Dollar and we go back to the downdraft of August 24th, what you're going to see, we have a high volume spike at 92.52. That baby's going to, I suspect, number one, go after that area, and we'll see whether that area holds. Now, with King Dollar, folks, okay, if that area doesn't hold, man, oh man, King Dollar can be down very, very quickly. The reason being is that King Dollar went up so fast from July of 2014. July 2014, the beginning of July, we were trading out at 80 on the King Dollar. It was a non-stop move that went up to 100. That's an incredible move. That's a 25% move, right? So it doesn't mean that it will go down to where it started in July. The reason I would say it wouldn't do that is that because what would stop it is from years ago, meaning in 2009, we traded at the 88 level for about 5 months. So what I do expect is that as you get to that 92.50 area, if it does break down, then you're going to be to 88. You'll be to 88 very quickly. If that's what we have happening, you're going to see these commodities go topside very, very quickly. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished down 55. NASDAQ off 22. S&P's down 7.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD. Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 55, NASDAQ off 22, S&P's down 8. And if you take a look at how we pull back here, what you're going to see is this. We did 823 million in NYSE versus like about versus the 983. On the NASDAQ composite, what you did is you did 1.6 billion versus 1.8. So what you have here is that you have a sideways move, slightly lower, light volume. That says that the market still wants higher price. We go over to Valiant Pharmaceutical, VRX. Now, Valiant right now, folks, traded down $1.99 today. We're $26.11. And this baby right now is at 26.01. So this is what is coming across the tape right now, which is going to be pretty intense watching this whole thing shake out. Valiant Pharmaceuticals is facing a pushback from some of its lenders as it seeks to waive a default and loosen restrictions on its debt. The resistance may complicate Valiant's efforts to win support if it needs before the Wednesday deadline for lenders to respond. The company which has, so check this out, this is amazing. The company which has $32 billion in total debt must gain approval for more than half of the investors holding its more than $11 billion of secured loans. Those that are balking are demanding a higher interest rate and a better fee, said the people, who asked not to be identified. A spokesman for Valiant didn't immediately respond to the request for a comment. Valiant began seeking an amendment and waiver to its bank credit agreement last week to eliminate a technical default that arose when it didn't file its 10K before March 15th. The company is offering creditors a 50 basis point fee and a half a point boost on the interest it pays on its term loans, people with knowledge of the matter said at the time. Negotiations are ongoing. Some lenders might see it as an opportunity to extract better pricing or other terms. Under the current proposal, the drug maker is also seeking to loosen restrictions on its credit pack that govern a measure of earnings the company needs to maintain relative to its annual interest expense. So what you have here is this, folks, okay, is that you have a company that the equity price has got destroyed. You have a company that the leverage they employ is so far over the top, it's unbelievable. So those two things in themselves are a problem. The largest problem, and this is where this thing is going to, my take is Valiant's going to go a lot lower, and it's probably going to happen really quickly. And one of the main reasons is this. This has to do with Valiant is asking its creditors to extend the loans covenants that are out there. And they're asking that in the context that they haven't filed their financials. It's like, that's insane. It's not that it hasn't happened, because it's happened plenty of times, but they're going to have to pay up more than 0.5% fee structure with another 0.5% tacked on the end in order to get that done. And I don't even know what they're paying right now, but that is not enough, because what I have seen plenty of times is this, and this is where this gets really wild, is that it said inside that text should need more than 50%. It's going to be one of these deals, who gets their money first, Yeah, so we'll see where it shakes out. But if you take a look at Valiant, what you're going to see also, I'll bring this back on a longer-term basis. Right now, we put this on a monthly. You know, we're at $30. You already broke. I mean, this thing has $19 all over it. And, you know, if you come down with $19 with volume, then it's got real problems. On the basis of an ABC down, watch how this goes. This is pretty sick. I think, well, let's find out if this is a out of business ABC down. We've seen these before. So your 8 point on this is the high, which is 263. 263.81 is the high. The B point is 69.33. So that's 194 A to B. Yeah, and the C point is 119. So on a basis of an ABC structure on the way down, it's saying Valiant will go out of business. And I remember, you know, going back to whether it's 94, 95, when these first showed up, that these companies would go out of business. Well, sure enough, you know, some of them did. So right now, you know, this took apart as B point, took it apart with volume, and you get there's it's 194 A to B equals C to D, and the C point is 119. So it's got huge problems, man. So we'll see where that whole thing is going to go. But that type of debt, you know, and the amount of large funds that are going to get whacked on that are pretty incredible. Let's go take a look and just see if anyone is actually moving this out right now. Oh my God. This is hard to believe, actually. So check this out. 324. This guy's just not stopping. So check this out. This is pretty amazing, actually. So, oh man. Okay. So Pershing Square is already in trouble with this deal. And Pershing Square just bought another 5 million shares on March 24th. They just don't stop. This is pretty amazing, man. So right now, this is Ackman, okay? And, you know, he already doubled down. Now, this wasn't a double down, but 5 million shares is quite a bit. And see, what happens is this. He has to file every time that he does something because he owns more than 5% of the equity, folks. And let's just go see where this was. So VRX. So he filed on the 24th. And what happens when you own 5%, you got to file the day you're doing it. So the 24th. So he bought at 30 on the 24th. This is pretty amazing, actually. On the 24th, folks, okay, the low of the 24th was $30.80. The high was 32. So on those 5 million shares, he's down another $4. $4.60. Big numbers. Let's see. That's one change. Yeah, that's the biggest change. Let's see if anyone moved out. Oh, yeah, there you go. Bank of Montreal is selling. Bank of Montreal, April 1st, sold 2.5 million shares. They're taking the heat and getting out. So bottom line is that that's pretty intense. It's about as intense as you can get. You just keep buying on the way down. So this is going to be wild watching this whole thing shake out. We take a look at some of the high-volume stocks out here today in this low-volume market. You have Bank of America was down 2 pennies. You had Facebook off 351. Facebook was the mover on the way down inside the NDX 100 today. Freeport McMoran was down 47 cents. You had Ford down 30 cents. Intel was down 45. Alcoa was down 23. You stay right there, folks. We'll be coming right back. Dow Industrials finished down 55. NASDAQ off 22. S&P's down 750. We're going to be right back. If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over to Tesla, TSLA. So Tesla had a nice run today. That being said, it was up $9.40. It traded, closed at $246.99. And what that run up was all about, folks, is the amount of new vehicles that they had just started taking orders on last Friday. They let's see, they were coming out, I believe it was 250,000 orders. They their Model 3, they had taken 250,000 reservations for. Now, that being said, you know, you talk about getting whipped around. Right after the close, actually at 5 minutes ago, Tesla delivered 14,820 vehicles in the first quarter of 2016. Well, they were looking to deliver 16,000 vehicles. So, you know, they shot, what is that, 1,280 vehicles. Not that it's a lot, but it's enough that's whacking the stock right now. So Tesla closed at a price point of $246. You're trading at $241. If we go take a look at this and we bring this back and see where we're trading right here, it's hanging right at highs. You know, now this is a situation where at $246, bring this back. Yeah, the high in this equity is $291. Now, when you bisect and dissect this, where do you see what you have here? when we went topside, folks, in February of 2014, Tesla on a monthly basis went from 169 to 265. Big move, right? $90. You did volume of 226 million. Then you made a high. So then we went sideways for 5 months. Then you made a high with 132 million. So your correlation there is 132 million versus 226. And it failed on price and volume. What does Tesla do? Tesla goes from $291 in September and goes down to 181. So the volatility is like in spades. That goes down $110, right? That, as it went down, you came down with 122 million shares, but you were going against the breakout area of 226 million. So you can see, okay, you go against the breakout area, reject price, guess what? It wants to go topside again. Now, this is where it's going to get wild. We go topside again. We start out March of 2015 at $181. 4 months later, you're at $286. So this thing likes to do $100 moves. Now, it hits a high, and watch the correlation here with volume. 80 million versus the last high of 132 million versus the high with volume with 226 million. So your correlation there is 80 million against 226 million. You close underneath it. Now watch this, because this is the number. We go from $286 a share in July, and we're in April now of 2016. We go down to 141. So it gets cut in half, 50%. Has high volume at 141, 133 million shares. We go up last month. Last month we do 100 million shares. What you want to do is, so your 100 million is going against 80 million, is going against 132 million, is going against the 226. What you want to do here is just let this be. And as the S&P tries to get up into the highs, I suspect this will get a little bit higher. Yeah, you can't go short the stock because it's 32% short interest, but this baby wants to go lower. So it's going to be wild watching this whole thing shake out. Because you can see, as you go back, we were going back almost 2 full years. It's been making a high for that long. Well, let's get see what that first high was brought in. So your first high, February. Yeah, so it's 2 years. We're dealing with 2 years. 2 years of distribution at highs. So bottom line is that I do expect you're going to see somewhat higher, because still out of the 9 points that went up today, it's only given 4 or 5 back in the close. But that baby will more than likely test at least the bottom of its highs and then give it up in spades. We go overseas, we take a look at the markets overseas. This is what you have. Shanghai, the Hang Seng, they were closed. I believe they're going to be opening tonight. We take a look at the Shanghai first. Shanghai rejected lower price last week, did it with lighter volume. The Shanghai right now is trading at 3,009. 3,028 is what it wants to go into. Now, what's going to be cool is this. If the Shanghai can actually break this, which it very well could tonight, that's going to be a huge heads up on our markets. Why? Because this will be a small ABC up. At the Shanghai, 2,700 is your A, 2,772 is your A, 3,000 is your B, so we get approximately $230, which would get you into the 3,150 area in the Shanghai. That would put more juice under our markets overnight. And, we'll see where that baby shakes out. We take a look at, that's the Shanghai market. We go into the Hang Seng, which was also closed last night. They're opening tonight. Shanghai was down 277 points on April 1st. Had lighter volume. We had gone topside on the Hang Seng with 2.1 billion. You came back with 1.6. So that also is saying it wants to try to get up into the 21,200. Now that would be quite a move. The 21,200 would be a heck of a move but that's what it looks like it wants to do. The Nikkei, NKY, so Hang Seng and Shanghai look like they want higher price. The Nikkei is getting smoked. The Nikkei came down 16. Well, it came down. Let's see. It came down 500 points on April 1st. You went sideways last night. We're at 16,123. This can get down to 15,450. You had an expansion of volume on the 1st. Last night wasn't that bad. What that's all about, too, by the way, folks, okay, that's all about the good old yen. The correlation inside here, let's go to the JPY for a second. What you're going to see is that the yen right now is trading at 111, and as the yen, that's getting stronger, and of course the market cannot stand that yen getting stronger. The yen has just gone from 124, 125 to $1 to 111. The yen had made its low at 73 going all the way back to 2011. And, you talk about a currency fluctuation. If you take the 30 years, the yen had been getting stronger for 30 years. This is the first major pullback that we've had inside the yen since it made its bottom in 2011. So what you do have here, we're at 111. When you take a look at the correlation of where it can pull back to, it's pretty clean. And that would get you back into this 104.06. That's where we had broken topside. It was a beautiful ABC structure up. And guess what? You did the full A to B equals C to D. This is Tom O'Brien. This is TFNN. Don't forget, folks, you can get us 24 hours a day right on your cell phone, TFNN.com. Hit Tiger TV. To get great HD video programming as well as audio programming. You stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And yes, a couple of the targets are talking about Tesla, and this is pretty amazing, folks. The short position inside Tesla is 32.89%. Yeah, so you do not want to be short in that thing, particularly in the equity market. They do have options. So bottom line is, if you're going to short it, make sure it's a defined risk trade. But that is one of every three shares have to get bought back, which is just no doubt pretty amazing. Now, let's go over to the oil sector. We take a look at the XLE. So you had oil pullback. The XLE right now is trading at $60.62. Now, the XLE in general has a high volume high at $70. I expect we're going to see that get tested. It also has a high volume high left over from March 17th. So what do? March 17th, the baby gets up to $64.27 and does 28 million shares. Well, we back down with 15 million today, and you're backing into 26 million. So you can see as the XLE is back down, you have dramatically lighter volume. It already has had a heck of a move, and that's why it's building cause. The XLE had made a bottom on the 20th of January. That was at $49. It runs up to 64. Now you're backing down with lighter volume. Now that's on the daily. We put this on the weekly. What you're going to see is it's also a really nice setup. You have a weekly high of the $64 price point again. 129 million shares up there. Last week we backed down with 70 million. This week, you're backing into its monster sign of strength, which is at that 58.50 area. So what I expect you're going to see is that XLE somehow, some way, is going to go topside once again. Chevron today, Chevron is very well maybe the leader that will take it up there. What Chevron did, it's a high-end consolidation. The November 3rd high is $98. We've already reached 97.91, and we did that on March 18th. Now, so watch what happens. March 18th, you have a swing high that has big volume in it, 14.344 million. We back down, like today we backed down with 6.5 million. There's no sellers here. This is consolidation. What it's trying to do is get into that high, which is the 98.64, and hey, guess what? You very well could just basically blow that baby away. The XOM, and the reason you want to look at it is this, is that if in fact this S&P wants to finish up an ABC structure on the way up, I expect we're going to need oil to basically get on the positive side and give it a hand. The ExxonMobil, and the reason we're looking at Exxon and Chevron is that they both are the largest weighting structures inside the XLE. So if we go to the ExxonMobil, $87.43 is the high. That also has a decent spike at the $84.60 for March 18th. We go up with 19 million. Today, what do? You back down with 8.8 million, 8.0 million. That's also saying that it wants higher price. Now, that's on the daily. On the weekly, same type of setup. On the weekly, well, the weekly actually needs more volume. Yeah, the weekly needs more volume. We did 67 million 2 weeks ago. Last week we did 54. That has to expand up until about the 80 million area. We go take a look at the XLF, the financials. So what do we have inside the financials? Financials sideways move today, down 11 cents. You're at $22.59. And this is just not backing off. This is going to get interesting watching this one because this is weak. But bottom line is that, guess what? You're not backing off on price. And this can go test, excuse me, folks, this can test the $23.30 in a heartbeat. That's the December 18th low. That's on your daily. We put this on a weekly. The financials are a dog, folks. That's the bottom line. But guess what? That being said, this still wants to go up to $23.24, which is, for the XLF, that is a decent move. JP Morgan, we take a look at JP Morgan. That's been a sideways move. BRK, Berkshire Hathaway, is the highest weighting structure inside the XLF. If we bring this back, this is doing a dead cat bounce, but you know what? It probably, Berkshire Hathaway is, this is gonna be cool watching this shake out, because what we're gonna wanna do this week is that we're gonna wanna put these indices together with some of the higher weighting structures inside the indices. The reason being is this, is that as the ABC structure finishes inside the S&P, the NASDAQ, the NQs, the IWM, what I'd like to see is that some of the higher weighting structures also have tested and failed if, in fact, I'm going to flip this position around and go short, which I expect I'm going to be doing when the markets finish their ABC up. So on a Berkshire Hathaway, what that would mean is this, is that your 143.22, the low of the high of December is 144.75. It did 31 million shares on a weekly basis. Last week we did 16 million. What I'd want to see, first off, that number get hit, meaning the 144.75. It rejects higher price rather, does it with lighter volume, and would want it to be tremendously lighter, just like last week. That brings your probability much higher that you're going to have more distribution. So last week we did 16.6 million. The volume characteristic up at that high is 31.8 million. And now what's really cool is this, is that Berkshire had already come down with volume. So watch how it comes off the high. You hit a high of 152, December 14th. When it starts falling apart in August, you come down from 142 to 134, 22 million. You went from 136 to 125 with 39 million. So you went from 142 to 125 in 2 weeks with monster volume. That is the type of yin-yang high volume spike at the high, meaning it wants to test that level, high volume spike at the low. That's your consolidation that's set up. And if it fails going into the highs, guess what? You have that low that's hanging out there like a sore thumb, and that's where that baby will go and try to test that whole area on the way down. We go take a look at the good old Walmart. So Walmart is one of the leaders off the top. And what we have with Walmart right now is this. It's just on a counter trend bounce from $56 to $69. If you remember, this thing got absolutely toasted. Walmart had hit a high out here of 90 bucks. That was at the beginning of the year. It goes from 90 down to 56. Now what you're doing is trying to make its way into the 72 area. So that's where, it's one of the places that Walmart did break down. 72 would be the game. 72 we came down with 70 million shares, and we went up with last week, folks? 32 million. That's the type of counter trend bounces that you're looking for to sell away on. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials finished down 55. NASDAQ off 22. S&P's off at 8.5. We'll get right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Let's go over to that copper contract. HG. Let's see what we got here. HGK6. Okay, so copper right now is trading out. It was down 2.5 pennies today. 213.80 is where we're at. You've done 44,000 contracts, and the 44,000 contracts is coming into 97,000. Now, what I do want to see is I want to see the 212 hold. You know, you can actually get down to 208.20. You can go down to 208.20. Would be nice to see the 212 hold. That's the bottom line. That's what we went topside from. Well, that was one of the huge signs of strength we had. Copper has had multiple signs of strength, folks, as it moved higher. So we'll see first off how it operates at this 212 to 208 area. You know, the volume contracted today. Now what you want to see is that the rejection of lower price. You know, if we go over to Freeport-McMoRan FCX, we're going to see Freeport-McMoRan. That comes down today 47 cents. You're at $99.42. We did volume of 38 million. Well, that 38 million is coming into 84 million. You know, so that's this here. I believe. Let me just get what this is. Yeah, this is mainly a copper stock now. So when you take a look at the amount of money Freeport-McMoRan takes in, right? You have 7, 8, 9, 10.5 billion is in copper. 1.7 billion is in oil. 1.5 billion is in gold, and then 2 billion is in other metals. If we go take a look at the complex itself, the commodity complex, this is what you had. Natural gas was up 2.3% today. Cattle was flat. Corn was flat. On the way down, we had unleaded gasoline was down 4%. Crude oil was down 3%. Coffee was down 3.4%. Sugar 3%. Gasoline 1.2%. Copper 1%. So if we go over, let's go take a look at the natural gas market. So natural gas caught a bid out here. Gave it up on price. So this is going to be cool watching this shake out, and this is why. So natural gas today, well, first off, let's go back to last Thursday. Last Thursday, natural gas numbers come out. They were basically in line. They were a little less than, meaning the buildup was a little less than they thought by, I think it was by 5 BCF less. Bottom line, natural gas had traded from 202 down to 193, closed at the bottom of its range, but yet had high volume. We did 184,000 contracts. What we did out here today, you did good volume. We did 149,000 contracts. It once again failed to hold price. This baby right here, I suspect, number one, can get into the 198 level, but more than likely that 198 level is probably the buy inside natural gas. And it looks to me like natural gas is coming off that bottom. If we go to the UNG, and we take a look at that correlation, the UNG is the ETF structure for natural gas, and I like how this is set up. You had volume come in last week. The buy on this would be at about 633. Right now, you're trading out at 682. And we'll see if it gets that low. But that's how this seems to be setting up at this particular point. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking right back here tomorrow morning. Go get 'em, folks.